Welcome to you all once again to this recorded lecture on financial accounting. It's been a long time coming. I know. Um, Before us is the question: the following control account has been prepared by a training accountant. The question says, what should be the closing balance when all the errors made in preparing the receivables ledger control account have been corrected? So when a trainee accountant prepares, books, we need to be concerned. I think we need to be concerned that they could not have done the right thing. I think that concern is valid. So we need to correct the errors that they could have made. We need to correct the errors that they could have made. So let me just try to see if I can find some space here so that we can correct what the mistakes rather that the training accountant could have committed. All right, so we have receivable ledger control account, and of course an account has got the debit side and the credit side. Let me just take it there. Credit side. Hope will not be too long here. Please make reference to your questions paper. So I'm going to populate this account for you so that you can see what it is that you need or you ought to expect. So my opening balance brought forward should be on the debit side, closing balance on the other side. Then bank, or indeed cash received from credit customers should be credited. Irrecoverable date should be credited. Contras, discount allowed as well. Discount allowed should be credited. And there is also what we call contra. All that should be credited. The sales that we make, sales, credit sales, we should debit that. Sales day book, of course, is a source document there. Sales record or book of prime entry rather. What else do I have? Here I've got over refunds. I think I can always include that, as well as interest, overdue interests. Okay, let me just try to correct that. Okay, so let's begin to get these figures just the way they are. Opening balance 308,600. I think you can see that. Scored balance brought forward 308,600. I've got that figure. This might take me some bit of time. Credit sales 154,200. Again, on the right side. What else do I have? Got cash sales 88,100. That's a distractor. I'll leave that one. Contra 46. I push it where it belongs, there. And what else do I have? Got the credit side now. I'm picking figures from the credit side, putting the figures where they belong. Cash belongs on the credit side. 147,200. 147,200. That's still fine. Then what else do I have? I've got discounts allowed. 1 full. I put it where it belongs. Yeah. What else do I have? I've got interest on overdue accounts 2.4. I think we need to put that one here. Let me just check that. That's correct. What about the recoverable dates 4.9? We put that one up there. Yes. What about allowance for receivables? That one is not an item to be considered in this account. Again, it's a distractor, just like cash sales made to cash customers. So I'm going to have to sum up here just to ensure that my totals are equal, and then I'm going to have to rule off the account by finding the difference between that amount and all the other figures. Here I could have done a range, of course, but still okay. Okay, so I'm finding that amount. Okay, 307 100. Okay, do I have that option? Yes, D. So we can see D here is the answer. Okay, so 32 says, which of the following material events occurring before the financial statements are approved are adjusting events? The valuation of property provided evidence of impairment at the reporting date. That is an adjusting event because that property was held at the end. Sale of inventory held at the reporting date for less than cost. That is an adjusting event because that inventory must be reduced and it was held at the end. There's evidence of existence of conditions. And then discovery of fraud or errors affecting the financial statements. This is a clear adjusting event. Otherwise, we shall overstate our profits or indeed our assets or understate our liabilities. Then we have got for the insolvency of a customer with a date owing at the reporting date which is still outstanding. Again, that is an adjusting event. So these are your notes. I'd like you to take time to read more on what we call IS 10 so that you can appreciate most of the things discussed there. I'd like to go to the next page, the next question. I just have a few questions to tackle here so that we can go to the other side. And of course, when it comes to the other side, we should already know that what should we know? That there are certain questions that have already been done. So I'll send you the other question later, the more right. I think I'll be sending it to you later. So 33, now we are on inventory valuation. The requirement is, what is the value? I hope you can see this. What is the value of the company's closing inventory of the engines by year end 30th April 20x6? So we have a company that values its inventory using FIFO. 1st May 20x5, the company had in its inventory 700 engines of inventory valued at 190 each. During the year ended 30th April x6, the following transactions took place. We have 1st July, 500 engines being bought. 1st November in x5, 400 engines being sold. We have got 20x6, we bought 300 engines, and 15th April we sold about 250 engines. So again, we need to establish the value of our engines. So let me just write this. This is supposed to be question 33, of course. Let me just say inventory valuation. We want to use FIFO, of course. FIFO means first in, first out. For you to find your closing inventory, so closing inventory really is equal to opening inventory plus purchased units, purchases of inventory less sold units. So that's what closing inventory is. Okay, so let us try to work out something here. So closing inventory, therefore, in this case will be equal to, and please follow what I'm going to do, equals to, initially we had 700 engines. Let me just get that one. Okay, so equals to 700. What's going on? Okay, so let me just try to clear this. Okay, so let's try again. Okay, speaking. If I can put the figure here, is it gonna pick? All right. Am I? Okay, so there we go. Let's try to say closing inventory. In this case, will be equal to. So let's have our opening inventory plus receipts. You know what we say in cost accounting. Otherwise, we're going to have too much time wastage there. So let me run with my receipts. My receipts, I've got in my receipts, I've got a 700. In my receipts, I think on the 1st of July, 500 engines, seconded by 300. So 500 plus 300. Okay. If I look at my sales, my issues, I have got 400 and a 250 there. So my first one was 400 and the other one was a 250. So when I do the summations, I discover that here I had that number and also here I've got that number. So the closing inventory therefore will be the difference between the two, this figure minus that figure. We have got 850. So this 850 must be valued. I hope that we can just make sense out of that. The 850 must be valued. So 850 is a closing inventory. We need to know how to value it. So we'll value it in reverse order. We're going to make an assumption that the units in inventory are valued at latest prices. So we're going to value this in reverse order. The latest batch, that came in inventory is the batch 300, I suppose. Yes, you can see that figure here. And the second latest is 500, and then we have got that opening inventory. So we follow that route because we are doing first in, first out. So I say 300. I'll remove that, and then I remove 500. Now I remain with a 50. The idea here is to make the total difference between all these figures new, okay, so that you can do the correct valuation of your stock. All right, great. So now I want to pick the respective purchase prices for these batches. The opening inventory, I think we can see a 190 there. So we put the 190 here. What else do we have? The second latest batch was valued at 220. I hope you can see this figure. And the first latest batch is 230. Okay, I hope that you can see that. So let me just go and push those figures. Okay, so what do we have? Yeah, so it says 220, and then what else do we have? We say 230. I hope that that's correct. Okay, so let me just check myself. Yeah, that's fair enough. All right, so now we find the products. Okay, the product. In order for me to make these figures positive, I think I'll just be putting that sign there. Okay, so let me just copy my formula down there. Yes, I hope that you've seen that. All right, and by the way, are these thousands? Okay, so it seems as if they're not. Let me just check here. Okay, we just need to have the correct figure. So now let me sum up. How much do I have? I've got that figure. Okay, so that's the answer that we have, 188,500. And I think if you look at your answers here, that should be the answer there. Okay, what else do we have? We have got the issue of business equation. In the next question, the question is saying, here please, what is Amy's profit for the year 31st December 20x8? Amy is a sole trader. He has got assets of that much and liabilities of that much on that date. We must find the difference of between these two figures to find the capital, which is the opening capital. During the year, she paid 65,000 in the business, which is opening, which is capital introduced rather, and then she paid herself wages of 800 per month. She needs to survive. All right, so we need to multiply that figure by 12 to find the total amount withdrawn during the year. At 31st December, the figures for, assets and liabilities is given again so that we can find what we call the profit there, or the closing capital. So let me again refer you to the business equation. Profit is always equal to closing capital, closing capital less opening capital plus drawings. Please, you can write that. Don't like leaving out some of these things. Less capital introduced. Okay, introduced. So I'm just going to do this in a formula, and then we're going to see what will come out, because Excel is much more better. Introduced. Okay, so students need to see this. Profit is equal to, if we may have following now. So you say closing capital, in this case it would be 614,130 minus 369 770. So 614,130 614,130 minus, I think I'll need just to put the formula already here because of time. So 614,130 minus 369,770, 369,770, close brackets, minus, again I go now top there. What did we open? 569,400, 569, okay, 400 minus 412,840, 412,840, 412,840 plus 65,000, then minus, what do you have? The 800 per month. Okay, so this one's supposed to come after, so 800 per month comes now. Multiply this by 12 months. Remember that those were monthly withdrawals, and then you less capital introduced, which is 65,000, if I may check that one. Yes, I'm correct. So that's what we have there. I have that, you can see that. Okay, please take note. This is what I've done. All right, so that's what we have there, and of course the answer is A. I'd like to make progress to the last question in this series, and then I'll send you the other essay question later, and then I'll send you the other video which is already done, so that you can always appreciate what is already going on. I would like to go to 35. B company extracted the trial balance for the year ended 31st December, except in the total the debit exceeded credits by 300. Which of the following could explain the imbalance? So in this case, debits are more than the credits. Sales of 300 were omitted. That would mean that the credit side would be less. Returns inwards of 150 were extracted to the debit column of the trial balance. That's the correct treatment. Discount received 150 were extracted to the debit column of the trial balance. That is the wrong treatment. Assuming that the payables was also debited, we shall have a double debit of 150 plus 150, which will give us a 300. So that's the answer there. And then the bank ledger account did not agree with the bank statement. Of course, that is out of question. Bank statement does not form part of double entry. I'd like to agree with C that this is the answer here, because we have got a double debit there. So thank you very much for listening in. I will send you more work very soon.